Are cryptocurrencies money? Are they securities? In this video, I'm going to explore how regulators and investors should think about this remarkable new asset class. What actually are cryptocurrencies? Is Bitcoin money? Is it a security? The question turns out to be significant. Governments want to know how cryptocurrencies should be taxed and regulated. If Bitcoin is a security, for instance, then it might have to be regulated by Britain's Financial Services Authority, or the American Securities and Exchange Commission, or the Australian Securities and Investment Commission. If it's a security, that affects how it should be taxed. Should the sale of cryptocurrencies be liable for capital gains tax? So far, different countries have approached this question in different ways, but there are still a lot of open questions. And from an investment perspective, understanding whether cryptocurrencies are money or securities might change your diversification strategy. So let's see if we can figure it out. At a technical level, cryptocurrencies are just tokens that incentivize the users of blockchains to look after the network. Bitcoin miners who solve the proof of work puzzle and create new blocks of transactions are rewarded with newly minted Bitcoin. But what are these tokens, economically speaking? One traditional way to think about money is if it fits three criteria. Money is a medium of exchange, a store of value, and a unit of account. On this, Bitcoin right now does very poorly. It's not a very good medium of exchange. Bitcoin transactions can take up to an hour to be confirmed. You're not going to want to wait an hour to confirm that you've paid for a cup of coffee. There are technologies trying to solve this problem. And there are other cryptocurrencies that confirm transactions much quicker. But right now, it is a problem. Is Bitcoin a store of value? This is a bit complicated. One Bitcoin will always be worth one Bitcoin. But the exchange rate between fiat currencies like the US dollar and Bitcoin fluctuates so heavily, it's not a great place to store value. Is Bitcoin a unit of account? In the early days of Bitcoin, some online retailers listed their prices in Bitcoin. That doesn't really happen anymore. So Bitcoin right now isn't really money. But does that mean that cryptocurrencies are securities? Well, some certainly are. There are a lot of cryptocurrencies that look like company shares, where investors have purchased ownership stakes in a platform for expected gain. But not all are. A lot of cryptocurrencies are what we call utility tokens. They perform a critical function for the operation of the blockchain application. You can still invest in a utility token, of course, but it doesn't really make much sense to call it a security. It's more like an internal accounting tool within a firm. Looking at the basic economic attributes of cryptocurrencies, my colleagues Professor Sinclair Davidson and Professor Jason Potts have concluded that a cryptocurrency token is a hybrid asset, combining the best features of debt and the best features of equity, or dequity. Economists didn't even know dequity was possible before Satoshi Nakamoto invented Bitcoin. So what are cryptocurrencies? They're not really money, and they're not always securities either. Cryptocurrencies are a new form of asset to exchange value in an economy. We've never seen dequity before. Part of what's so exciting about the cryptocurrency space is seeing entrepreneurs, investors, and innovators try to figure out how best to use this remarkable new asset class.